Welcome to this installment of IUL Insiders Insights. I'm here with some of my great friends and colleagues. I'm Randolph Love III, and who are you?
I'm Doug Andrew, okay? I'm just a citizen of the United States.
Okay. Yeah, sure.
And I am Shakey Webster, affectionately known as Auntie Shakey, the financial matchmaker.
Hi there, and I'm Mark Wade. And I'm Greg Kite from Florida.
And they say if you ever want to know who the wealthiest person in the room, the one who didn't say who they were. All right, but definitely we are the IUL Insiders, and we are masters. We've been working with Doug Andrew, the godfather of IULs, for a couple years now. And this is what got us doing what we're doing now. And we definitely want to make sure everybody understands that there are several things that you can do with your IUL, Index Universal Life. A lot of people talk about strategic rollouts, and they talk about rollovers. A lot of people use it interchangeably. Is that not the same?
Absolutely not. In fact, a rollout is a term I think I coined years ago. A rollover is like going from the frying pan into the fire, so to speak. And that's where people, I think, get duped into rolling money out of their 401k into an IRA and being convinced to continue to defer, put off, procrastinate, paying tax to some future perceived unknown advantage. And then they turn 72, 73, and then they're told to take RMDs, required minimum distributions, thinking they're saving tax by stringing it out. And so that drove me crazy, and I created a software program that showed, what if people did that? And they kept paying RMDs, taking RMDs out to their life expectancy, their spouses, and then it transfers down to their kids. The kids have to pay tax on it within 10 years, and people were flabbergasted with the amount of tax they ended up paying. And I said, no. That's you don't want to roll over and keep putting off. You want to roll the money out while account values are lower. Taxes are lower because most people believe that taxes in the future will likely be higher because of irresponsible government spending, the printing of money, and so forth. And so you get the taxes over and done with sooner than later, strategically, maybe over a 5-year or 10-year period. You roll the money out, get the taxes over and done with at today's lower tax rates while the account values are lower. You reposition the net after-tax money into something that's going to be tax-free from now on, a property structured max funded IUL. And if the market goes down, people say, well, I want to wait till I get back up to where my account value is a high watermark again. I said, why? This is an opportunity to get the taxes over and done with down here and then ride the market back up again safely, tax-free, okay? People just don't think through things. And then you take out tax-free income the rest of your life. That's a strategic rollout. But, I'm a tax strategist. Sometimes I help people resurrect deductions. Or establish new deductions that they maybe killed before. And so many times we can offset the tax that they pay on IRAs or 401ks with new deductions, and it's phenomenal. The bottom line is a rollout, many times we're able to not just increase their net spendable income a little bit, but by double, triple, quadruple, and they maximize their income and they maximize what they leave behind, and it's not either or. I often ask, why would you generate, $100,000 a year of income net out of your IRA or 401k, where you have to pull out $150,000 a net 100? Why would you generate $100,000 of income where out of the same assets you could generate $200,000 or $300,000? And not or. At the end of the day, why would you leave behind $1 million in an IRA or 401k that you stretched out when you die that could blossom to $2 million or $3 million? And people say, how do you do that? With max funded IUL. So I'm interested in hearing some of your takes on this, okay? Have you implemented that strategy with your clients? Okay.
Interesting enough, Doug, that you say that, every single person I ask, do they think taxes are going to go up? They always say yes. And so that being the case, I always ask them, I always tell them, I'd rather dance with the devil that I know than the devil that I don't know, which is the reason why I never leave my husband, because I know what I got right now. Okay, I don't know what I'm gonna get into, but no, that right there is really important to be able to understand and be able to do the rollout and use that as a strategy to be able to earn more money on your money.
Absolutely.
To follow up on that, think about this. How relevant and how timely is that question today? I mean, we've got the largest number of retirees post ERISA that created all these pre-tax retirement programs, right? It's the largest number of people that have these programs now.
Very true.
We see people all the time with substantial amounts inside IRAs and 401ks, 403b, 457c, all those great pre-tax savings programs. And those programs, they may have done their job because they allow people to save that money, right? But now the planning that you did earlier on when you put the money in those programs, for almost everybody we see nowadays, it's not the same planning they need to be doing now that they're thinking about distributions from those plans. Am I right? Think about it. I mean, how relevant is that to what's going on right now? And so, using a technique and a tool such as IUL and distribution planning, it just provides so much more flexibility, additional leverage, and way less rules and regulations that might be inside that IRA or pre-tax plan.
Definitely.
See, that's why I've always said at retirement planning
Yep.
is way different than what you did for your retirement planning.
Absolutely.
Greg, what's your take?
It's like Mark said, the rules and regulations, you think about the 59.5 rule, with an IUL, you don't have that. You don't have a tax penalty. So you got the flexibility for somebody younger if they need to access the funds. And then when it comes to taxes, I look at it and we see much less of taxes are higher in the future, and most people think they will be. Right now, we're at some of the lowest historical tax rates, or lowest tax rates in history. And there's a good chance it looks like the tax cuts that happened in 2017 may be extended. So what a great time to take advantage of this now, get that pain over with the taxes and move forward to a brighter future.
Greg, what's so I'm so glad that you actually brought that up because I don't think people realize that. I believe it was like in 1943, 1951, somewhere around there, the federal tax rate was somewhere around 91%. The federal income tax rate was somewhere around 91%. And so if people think we're paying high taxes now, oh my goodness, this is, like you said, this is some historical lows that we're in right now.
Yeah.
And at the end of the day, a lot of people don't want to pay the tax, but it's better to get, they're not saving money. You're going to pay tax sooner or later. I've actually helped numerous couples save $250,000, $750,000, $1.2 million. We took a couple in California from the highest tax bracket to a 0% tax bracket in 5 years. Okay. So Thank you for that question, Randolph. It's a dynamic strategy. Check it out.
Hey, Doug, can I expand on this for a second? I think you might be qualified to speak to this particular topic. What about when we start layering different strategies together and we start adding strategies and techniques in combination? Tell us a little bit about this thing, the banking technique, private banking or family banking.
Okay, yeah. See,
Hot topic.
I teach people how to have what I call their own family legacy bank. When we talk about the financial dimension of that, with IUL, for example, it's understanding how money works. And so business owners, let's talk about business owners as an example. Okay, I have many business owning clients, and they understand how the money works, that if they go out and invest in their business and they have employees and they're paying this employee $100,000 a year, well, hopefully that employee is making them more than they're costing. Otherwise, your days are numbered, right? So if you pay an employee $100,000 and the employee makes you an extra $200,000 or $300,000, that's a 2 or 300% return on employment costs. Now, it doesn't save the employer money to hurry and fire the employee. Why would you fire an employee that's making you 2 or 3 times more than they're costing you? If you bought a widget machine, okay, for $100,000, and that widget machine made you $500,000. Do you hurry and get rid of the widget machine because that's a cost? No, it's an investment. So the way money works, if I use money like OPM, banks and credit unions, they're not just benevolent institutions paying us interest. They don't take your money. The public, you can do 4 things with money: spend it, lend it, own it, or give it away. When it's at a bank or credit union or an insurance company and it's in a lended position, well, they don't put your money in a vault. They loan it back out again. In fact, banks and credit unions put 30 to 40% of their Tier 1 assets into insurance companies to increase the safety by like 6 notches from a triple B bank to a triple A insurance company. And they increased the rate of return. In 2008, they were paying 1% interest on every $1 million, 10 grand, and they turned around and put it in insurance, and they made 50 grand. BOLI, bank-owned life insurance. That's what we do. So I use leverage with liquidity. But I have a business owning client, for example, and in 2017, he called me, and he buys properties, whether it's residential, multi-residential apartments or strip malls. And he doesn't like to be the landlord, okay? He likes to buy them, fix them up, and flip them because he has a pool of clients that like to buy fixed-up properties. And so he called me in 2017, and he said, Doug, my IUL, that's my working capital account for my business, he says, I need to access $1 million, borrow $1 million. Now, he has several million in there, but he didn't call up and say, I want to withdraw $1 million. He's smarter than that. He says, send me that form. So I emailed him this one-page form, and he puts his name and his policy number on there. And the first question is, would you like to withdraw $1 million out of your IUL? No. Well, then would you like to borrow $1 million? Yes. Do you want to borrow at a zero-wash loan? Now, what that means is he can borrow money from the insurance company. Does he have to qualify for the loan? No. He's got $1 million. He's got collateral sitting there. Well, do you feel bearish about America this year? You can borrow at 2% interest so that it's tax-free and it's deemed a true loan under the Internal Revenue Code. And we'll credit you 2% on that $1 million of collateral. So it doesn't cost you anything, but it's tax-free. Okay, that's the secret to tax-free. He didn't check that box. He felt bullish about America in 2017. So he borrowed $1 million. Okay. He paid 5% interest, but he didn't have to write out a check for 50 grand at the end of the year. It's automatically deducted. He capped out on his IUL that year at 25%. Ooh. He got credited on that $1 million that was collateralizing the loan from the insurance company. He got credited 250 grand, tax-free, minus the 50. He netted 20% tax-free or 200 grand on his $1 million while he was using it to buy, fix up, and the $1 million was just for an earnest money. It was a $17 million strip mall. He fixed it up and sold it for $20 million. He made $3 million, but he kept making money on his $1 million while he was using it. That is the banking concept.
Mm-hmm. How about taxes? Think about this. Nobody likes taxes. Right? I don't know anybody that says, wow, I wish I could pay more taxes this year. Think about IUL and how it doesn't affect what you pay in taxes every year. And the first thing that comes to mind is Social Security. A lot of clients, when they come to see us, they're paying taxes on their Social Security because they're in that income range where they're getting taxed on 50 or 85% of their Social Security. Yep. We all know this, but I don't know if everybody who's listening to this knows the fact that whatever comes out of your IUL policy in the form of a loan, right? It's not the. Well, let me ask, Doug, does it show up on the front page of your tax return?
Does not show up on the. There's only 3 types of income that show up on the front page of a 1040 tax return. Earned income, passive income, or portfolio income. The IRS knows they're receiving the money, but it's tax-free, okay? Let me come back to the couple I mentioned a moment ago. Is it okay?
Yeah.
Do your thing.
So this couple in California, they came to us. They had $6 million in their IRAs or 401ks. My son Aaron helped them. They bit the bullet, did a strategic rollout, and they paid $2 million in tax. Now, the government should have been thrilled. They got a $2 million windfall of tax revenue sooner than stringing it out with RMDs. They netted $4 million into 4 IULs, 2 on the husband, 2 on the wife. That $4 million, because they didn't need to retire yet, doubled in 7.5 years with an average return of 9.6%. Okay, it grew to $8 million. They now have $8 million in 4 IULs, generating $800,000 a year, tax-free. They don't need $800,000. They're only pulling out $300,000. Yeah. They were in the highest tax bracket. They were in a 0% tax bracket. Well, you just said, Mark, the only other income is Social Security. They pull out 300 grand. They don't even have to file a tax return, okay?
Tax,
and
baby.
people go, is that tax? Yeah, it's because they are in a 0% tax. How many of you listening to this podcast would like to be in a 0% tax bracket? Okay? But see, they have an extra $500,000 as a hedge against inflation. Mm-hmm. This is what we do with IUL. I've never seen any other instrument that does that. Greg, what's your take on this?
Absolutely. It's just you can't beat it, and it's wonderful to be with the experts. All of you, so much knowledge here, to be able to share this with people and to show them, like these examples that you just shared with us, how it can help so many people just to have a much brighter financial future, to be able to take that wobble out of their financial life and be able to focus on things that are truly important.
Yeah.
So yeah, it seems like when most people use roll out and roll over interchangeably, that's not the same, because when you're rolling over, you're probably rolling over into something more volatile. But when you roll out, you can put it into something that might be a better vehicle. But the strategic part about it is, if you're close to 59 and a half, maybe you want to wait until after you get to 59 and a half to avoid that penalty. And then even if you start rolling it out, maybe you don't want to roll it out all together, because it might put you in a tax bracket that you don't want to be in. And then those people that Doug, Mark, Greg, Shakey, myself work with, a lot of people might call them rich. So they might get a rich man's IRA. But a lot of people don't know that maybe if you're a rich man, you make too much money to get an IRA. So
Listen
you might...
Rich man IRA. I love that. That's great.
So you might want to get something that allows you to put more in a vehicle that does a lot of what an IRA does, but even more.
Yeah. In fact, often IUL is referred to by savvy CPAs the rich person's Roth. Okay, because if you make too much money, you can't even have a Roth.
Right.
But you can set up an IUL for $500 a month. But people who have 5, 10 million, 50 million, we have a person putting in 100 million a year for 5 years right now. Okay, and it's because of what it does. Okay, it's tax free, and so it knocks the socks off of a Roth.
That's a good point, Greg. What's your feeling on not paying attention to what they call it?
Oh, yes, absolutely. It's not, when people hear IUL and they hear the word life insurance, automatically think I don't need any insurance, or I have enough. It's not what it is, it's what it does. So that's what we are sharing, and want to get that message out to people about what it can do for them and these benefits that you can have during your lifetime, to use this as one of the greatest financial vehicles. It's been called the Swiss Army knife of financial products and vehicles out there. There's so many uses of it. And so to think of it in terms of just life, and the insurance part is like icing on the cake.
Yeah, yeah.
You know, I often say that the government is one of the best marketing firms out there, right? Like, they're so good at marketing, because they do such a good job at leading us the way they want us to go.
Yeah.
And so it makes it so hard on us as advisors to sometimes show people a better way. I love you say all the time, good, better, best. You know, a lot of people are doing good things. A lot of people are doing maybe better things. But when you try to educate them on something that is the best, and you even roll it out and share it with them, sometimes it's difficult because they're so programmed in these
you wouldn't believe how many times people say, "How come I've never heard of this before?" Yeah.
Oh yeah.
That's a really good point. We all utilize this tool in our practice with our clients all the time. I know you use it a lot, Randolph. Tell me, when you explain what it can do, what a properly structured and owned and funded IUL contract can do, and your clients start with the idea of, well, I don't want more life insurance. When you explain it to them, how do they feel? What do they say?
Well, after all of this back and forth, because once again, by the time they get to me, if I've done it right, we're not even talking that much about it, because I like to educate people just like all of us, right? And what I tell them, I say, hey, just like my mentor Doug says, there are 3 ways to get money out of this thing: the sad way, the dumb way, and the smart way. The sad way, you put $100 down, you get a policy started, tomorrow you get hit by a bus. Your family just got $1 million check. That's a big return on your investment, but a sad way to get it. The dumb way is to withdraw. You don't want to withdraw from a properly structured IUL because you just eliminated all that value that you created because now it's a taxable event. You want to borrow. So when they say they don't need any more insurance, I say not only do you need more insurance, but you need to work with the professionals like us in order to make sure that you're getting it out the right way because it's not about what it is, it's what it does.
Yeah.
And because IUL is just a tool, everybody. It's just a tool. Would you rather get LeBron James's sneakers, or would you rather know how to take off from the free throw line, his jumper? All right. Do you want
jumper,
Phil
for sure.
Mickelson's or Tiger Woods clubs, or do you want their swing? It's all in the technique.
Well said.
And if you do want to benefit from the technique, not just the shoes, but the jumper, not just the clubs, but the swing, I think you should reach out to Shakey, Mark, Greg, Randolph Love III. You can't reach out to Doug, but the best way to get to Doug is through us.
Oh, these are masters. I can't recommend them more highly. They have taken the time, energy, money to learn how to do it right. If this is resonating with you and you want to make sure it's done correctly, because I don't want you to go down the road 5 or 10 years and then hit yourself because you took one of these out with your uncle or nephew and they didn't know what they were doing. That'll be a very costly relationship.
Amen to that.
Yeah.
So you're in good hands. Make sure you talk to these people that are doing it right. They will also talk to you about more than just your money. It's what I call the 3-dimensional approach.
Absolutely.
Because at the end of the day, it's more than the money. Yeah. Look at what maximum funded IUL does for your family: the peace of mind, the freedom, allowing you to go off into the golden years on the back nine of an 18-hole golf game of life and not have to worry about the money. Most Americans, they are worried most about running out of money.
Yeah.
IUL solves that. And now you can spend your golden years with your spouse and your kids and your grandkids and go on cruises and vacations and build memories, and you don't have to worry about the negative impact of taxes, inflation, and market volatility eroding away your hard-earned dollars. Other than that, I don't have any strong feelings on this subject. Okay? Yeah. But anyway.
No, none of us do.
Right, exactly. But that's the good life. Yeah. That's the good life.
Yeah, it's really good.
So in conclusion, I just want to say this, just like Doug said, everybody knows somebody with a IUL, not an IUL, but a life insurance license. Everybody knows it. You're going to hear us and you're going to want to reach out to that cousin, that uncle, that sister, that brother to get it started. And maybe they might know what they're doing. But I remember, and I'm going to close with this. Have y'all ever seen a Chrysler 300?
For sure.
It's a beautiful car. I grew up in a low-income neighborhood, and whenever we would see a Chrysler 300 come by, we would stop what we were doing, and we would watch it as it just rolled by. Like, look at that car. Look at it. Looks just like a Bentley. It looks just like a Bentley. Until one day I grew up. And when I was walking through this parking lot, not only did I see a Chrysler 300 and a Bentley parked right next to each other, they were both backed in and they were both the same color. And it was at that very moment that I said a Chrysler 300 looks nothing like a Bentley. A lot of us know people who have these licenses, but it's not until you put them right next to each other that you realize, that's not a Bentley. That's a Chrysler 300. Now, keep in mind, a Chrysler 300 is a beautiful car, good lines, smooth lines, good interior, looks nice. But wouldn't you rather be in a Bentley? This has been an installment of the IUL Insiders Insights. I want to thank you for spending this time with us and listening to what we have to say. And if you want to hear more, and you have any questions, put it in the comments. We really want to know what you think.
Thank you.
Thank you.
All right.
Well,